Today we've got major news in the financial world. 91 just announced a massive partnership deal that involves 400 billion rand in assets. In this video, we're going to dive deep into this partnership by Sanlam and 91. Now, this isn't just any other deal, it's a game changer. And as far as we know so far, it's bound to shake the financial services sector. And please, you need to stay tuned, find out exactly how this will affect you as an investor and the dynamics that it's going to bring in the asset management space. Please stay tuned. Welcome to this edition of Friday Money Matters, this Friday and every other Friday on this channel. If you're new here, please do subscribe so that you get informed every time we bring groundbreaking tips in business and financial literacy. Our goal here is to ensure that we empower you with financial skills and financial knowledge that helps you become a better investor and lead to the so-called wealth creation and a better future for all. I'm your host, Kenneth, and thank you for tuning in. This deal is a 15-year partnership, and in that partnership there is a transfer of about 400 billion rand in assets from Sanlam to 91. Now let's look precisely at the deal. What does the deal entail and how does it benefit these two companies? We know so far that Sanlam has entered into this partnership, and in this partnership what it means is that there is a transfer of 400 billion in assets to 91. They've appointed 91 as their primary active investment manager in single managed assets. Now, before you go into the deal, you need to understand exactly the dynamics of these two companies that are involved. Now, Sanlam is the biggest firm in Africa when we come to financial services. Now, it is a non-banking financial services provider that specializes in insurance and investment management, as well as wealth management. Okay, so it is this massive position in Africa and is a market leader in that particular space. Now, when you look at 91 has got vast global expertise in managing the assets, especially in the space of asset management, dealing specifically with fixed income, credit, as well as other specialized equities. So, which means that as far as management of asset is concerned, now this company is a sophisticated investor and is a market leader globally. Okay, but again, in the deal, I'm sure you've heard so far, I've mentioned that Sanlam has appointed 91 as their primary active investment manager in single managed assets. Now, when we're talking about single managed assets, what we mean is that the entire portfolio, investment portfolio, is being managed by a single entity or a single business or single manager. All right, now this is good, especially when you're looking for a unified approach in strategy as well as in the decision making process. So it brings everything under that one roof, in this case that roof being a 91 managing that portfolio with 400 billion rands in assets. Okay, next we need to look at the strategic benefits of this particular deal to these two companies. We've already established that these companies are massive market leaders in their space so far. Okay, so for Sanlam, what this basically means is that Sanlam gains access to the expertise. Now, it's a preferred access that they will have with 91 managing that particular portfolio, and this will give them a good market position, as it gives them opportunity to look into or to venture into other global markets, and knowing that 91 is a global leader in these particular fields. Therefore, Sanlam will have access into the network that 91 has built. Now, this will further increase its market position. Now, if you're looking from the part of 91, now the major benefit for 91 is that it gives them access to this massive asset portfolio of 400 billion in rand. Now, what that means is that it has also provided for a transfer of approximately 12.3% in equity to 91. Now, this will further increase 91's position in Africa and its penetration into the asset management market in South Africa as well as in Africa. Okay, having said this, now let's look at the impacts on investors. Obviously, such a move has got effects and impacts and other influences that it will bring, not only on the market but on the investors themselves. If you're an investor or looking to invest, what sort of impact will this deal bring to the market? Now, we're going to break it down into both positive and negative impacts. Let's begin with the positive one. Now, the first one is enhanced management. Now, with the expertise that 91 brings, we know that this is bound to bring a lot of expert advice and sophisticated strategic investment solutions that will probably bring a positive impacts for investors in this particular field. So the fact that 91 has got a diversified approach in asset management and is a leader there, it means that the management of assets that will fall under it is going to be enhanced. Now, the enhancement again comes from the fact that now they've got even larger resources being increased by this 400 billion injection that just came in. So as a result, investors are bound to get increased returns on their investments because of better financial management of those particular investment classes. The second one is broader opportunities. Now, knowing that 91 has got a massive network and is familiar with a lot of markets, it means that it will probably bring a more diversified approach to investment, thereby leading to a diversification of the assets and probably this bringing better returns. I've mentioned before here on Friday Money Matters that diversification is the name of the game as far as investment is concerned. So in this case, the broader scope that 91 has brings in this perspective to diversify the options, the investment options where these assets will be invested. And with this, then risk is drastically reduced or maybe increased, but opportunities of risk being reduced are quite high when there is diversification, and with that, better returns for investors. The third one is stability and confidence. Now, the collaboration between these two established companies is bound to bring stability in the financial markets, especially in asset management, and thereby making investors and other players and stakeholders more confident stepping out to try and invest in these certain asset classes that are going to be pushed by this particular partnership. So we're bound to see probably more collaborations in the future and a more stable financial services market moving forward. Okay, let's quickly look at some of the disadvantages or negative impacts that may arise as a result of this particular deal. The first one is integration challenges. The process of bringing together such elaborate and large portfolios is bound to come with operational hiccups. Now, operational hiccups will arise because it's not easy to integrate the Sanlam systems as well as those of 61. So from the operational side of things, there are bound to be hiccups, especially in the first few years in trying to integrate the particular portfolios. However, knowing that there are market leaders, probably this might not last long, but this is something to expect. The transition might not be as simple as we think. There might be a lot of hiccups which might be challenging for the two companies involved. The second negative impact could be market response. Now, there is always a risk of market volatility when such a deal comes through. So what this basically means is that with volatility, then risks increase. As much as volatility brings the opportunity of making more, there is also a risk of losing quite large sums because stakeholders might react in a particular way, and their response to such a deal will cause this volatility, whether they are moving towards the deal or away from the deal. They are bound to be winners and losers in this. So there's a lot of risk that can be generated by such a deal. So you need to really pay attention to all the market moves and be informed exactly to what is happening so that you are covered against such risks. The third one is fee structures. A change in management can actually lead to changes in fees, and changes in fees can probably lead to a reduction in returns depending on whether the change is good or bad. But obviously, if there is a change in fees, it might be on the upside, and if that is the case, therefore this might tap into some of the profits or the income that investors must get, and this might lead to a reduction in investment returns. Okay, having come to this point, we need to look at what the future holds for the asset management market or the financial services market. What is the outlook when we go forward from this deal moving into the future? Now we're looking at first, there could be increased innovations. Now with such a collaboration, there's bound to be a pool of resources. Now, in this increase in resources makes it possible for innovation to be born out of it. Now, basically, this means that better investment solutions or better investment products might come out of such a deal, and this might cause the entire market to follow suit. So there is an opportunity or chance to see greater and greater innovations moving forward in this particular market. The second one is competitive edge. Now, the enhanced capabilities that come as a result of the deal will probably give this partnership a competitive edge in the market. Now, with competition, we know that the R&D part of most enterprises then comes alive. Now, this means also that the other competitors in the market are bound to either come together and create their own deals, or maybe even want to be involved with Sanlam as well as 91 in the future. But as far as things stand, Sanlam being the largest in Africa means that the competitive advantage that it will have over other players in the market will be enhanced. The third one, we really need to mention that such a partnership can lead to market growth. Now, with market growth, it comes even a bigger asset volumes or portfolio sizes, and this might mean that we might have a snowball effect in the market, seeing more growth leading to other growth in, for example, parallel markets, or those markets that are linked to this particular market, or any other businesses that are linked to this partnership. Now, if Sanlam and 91 grow, any other affiliated businesses or stakeholders are bound also to reap from these benefits. Investors or groups of investors are bound to cash in from such a partnership, and therefore the growth might be very extensive in the near future in this particular market. However, we know that 91 usually specializes in long-term returns on investments. We are really looking forward to see exactly how this will benefit investors, especially long-term investors moving into 5, 10, or even 20-year periods. But don't forget that this deal is for a period of 15 years. Overall, while this deal can come up with risks, the strategic benefits, they seem to outweigh the risk that might be born out of it. However, I think we've also mentioned, and this bears repeating, that staying informed helps you make smart investment decisions. So you really need to stay informed, find out exactly what's going on and how that impacts you if you have any connection to Sanlam, or you are invested with them, or you've got insurance with them, whatever the case might be. Staying informed will help you make the best investment decisions. Please don't forget to give this video a thumbs up, as well as share. Also subscribe if you have not yet subscribed. Stay investing and stay looking for a greater and better investment opportunities. This is what we want. We are looking forward to a financial independence for everyone involved, especially for you, our subscribers. Thank you for watching. This is Friday Money Matters. We'll see you in the next edition. Bye.